Welcome back. As promised, let's look at some more companies that have been reporting numbers. And this one is Jupiter Lifeline Hospitals that we have our eye on right now. Came out with second quarter numbers just a few days ago, and it posted a 19% growth in revenue. However, the margin contracted slightly if you compare it over the same time last year. To discuss the quarter gone by and the outlook going forward, we have with us Ankit Thakker, CEO of Jupiter Lifeline Hospitals. Ankit, thank you for joining in. Season's greetings to you. First of all, happy Diwali. So we'll talk about the margin issue in Q2 in a bit. But if I look at the first half of the year and I compare that with the same time last year, then the numbers in terms of the occupancy are looking good. I think you're at 62%, little more than 62% occupancy versus 58% last year. The RPOB has improved to just slightly above 53,000. So are these levels sustainable? Is there scope to improve them in the second half? What's the outlook?
So on the occupancy side, we added a few beds in Pune a couple of months back, which are now beginning to get occupied. So that is helping the occupancy percentage go up. The Indore hospital is also now getting matured and settled down, and we are seeing better and improved occupancies in Indore. So a combination of both these things has helped the patient volumes and occupancies to go up in the first half of this year compared to last year. The RPOB side, like you observed, it is currently above 53,000. We have successfully recently concluded negotiations with the insurance companies for rate revisions in our Pune unit, which is largely dependent on insurance, more than 2/3. So beginning next week, we should also see improvement in RPOBs in Pune because of this. So in the second half of this year, we think we should have slightly improved RPOBs and the occupancy should hold.
Okay. Hi, thanks for joining us. But you are mentioning that the occupancy should go up, the RPOB should also go up. How much do you see it going up? What is the target that you have right now? Even if it's not for the immediate term, say for next year, where do you see this headed?
So RPOB, I think on an annual level, the growth should be inflation linked between 5 and 7%, whatever you think is a good number to plug in there. We believe that kind of RPOB growth is what we will aim and target for. On the occupancy level, we have, as I said, just added about 80 beds in Pune in the beginning of this year. So in the next year, we believe that Pune should see better occupancy numbers, as well as once Indore gets matured with these 230 beds which we are operating, we might add a few more beds in the coming years. So that should give rise to improved overall absolute occupancy in Indore as well.
Okay. Can you put a number to that, Ankit? You were at 62%.
So currently,
yes, please.
Yeah. So the percent terms keep moving. The percent terms keeps moving actually because when we add new beds in Indore, the denominator will get bigger. So even with the absolute increase in occupancy, the percentage term will keep fluctuating. So it might be a little difficult to make sense of percentage occupancy. But in absolute terms, we think that in the next year we should see a growth.
Okay, Ankit, since you didn't mention the Indore hospital, it did break even on the EBITDA. Can you tell us what you expect on the margin front as well, just for the Indore facility?
So Indore facilities should be in high single-digit EBITDAs this year. This is the third year of operation. Second year, we were EBITDA neutral. In this year, we should be in the high single-digit EBITDA number for the current year is what we believe.
Okay. Ankit, you have managed to pare down all your debt. I believe there is no debt on the books at all now. So that's great. You have cash of a little over 300 crores. These are, if we have the latest numbers. What's the plan? Acquisitions on your mind at all?
You're right. No, that's not the first plan, honestly. Paying down the debt was part of the IPO plan. We wanted to become debt-free. and become net cash. This is for two reasons. One is, we think that our growth strategy is more aligned with greenfield expansion. We would like to buy more lands and build more hospitals. So currently 300 plus crores that we have as net cash, we plan to use for land acquisitions in Western India region. And the cash which we will save month on month by virtue of becoming debt free, we plan to plow back into construction of the new hospitals. So over the next few years, we, besides Dombivli, which is under construction now, we want to add hopefully 2 more units in Western India.
That's quite interesting. And why that thought process, Ankit? I mean, is it because it's more cost effective to build a hospital ground up compared to the valuations that are being, that are being floated in the market right now? And again, just let's tie that back into the overall margin picture as well, because I think that was the only issue in the Q2 numbers. The margin was at 23%, lower than where you were in the same quarter last year. So as you're looking to go more greenfield, just explain that thought process and also an outlook on the margins.
Yeah, so I think 1% margin compression or 1% margin expansion in either case, does not make me very sad or very happy on the other side also. I think you can't really hair split and microanalyze healthcare margins to that level because of the variability of what the patients need year on year and month on month. As far as I think your second question was about expansions and why greenfield. So definitely we believe that greenfield strategy helps us in two ways. One is it helps us custom design and build hospitals which really serve the patients, the doctors and us well in the long term. And on the valuation side as well, you are right that if you were to go ahead and acquire some fully established hospital and the multiples at which hospitals are trading today, we believe that our money is much better utilized and our expertise is much better utilized in building and ramping up the facility ground up. So we will be able to create more value this way.
All right, got that. Ankit, we're going to leave it there today. Thank you very much for joining us, taking us through your outlook as well. That is the management of Jupiter Life telling us that, they are seeing that occupancy levels will go up further from here, from here as well, even for the individual plants in Indore, which is currently just around 49%. They're also saying that they're looking to add more beds. And in terms of the cash that they have, they probably want to use that to acquire some land in the western part of the country. But with that, it is time for a short break. On the other side, we're going to get a conversation going on where the markets could really be headed from here on. We'll have Surabhi Upadhyay, CIO Equities at Edelweiss AMC to take some questions.